This video is going to go over support resistance using the previous day's high and low. To add this to the chart, you right click, chart settings, add studies, and scroll down to previous day's high and low. This shows you on the chart where yesterday's low is. Keep in mind the start and stop of every new trading day is 5 p.m. Eastern Time. So at 5 p.m. this was the lowest low. And notice how it acts as a resistance area today. It came up to it, there was some selling there, it went a little bit past it, false breakout back above here, and then it acted as resistance almost to the pip here and caused the price to go down. That's how you use it. Currencies that break underneath the previous day's low or above the previous day's high are strong or weak. Look at some other examples right here. The pound dollar, 2 days ago's low, yesterday's low. When it breaks underneath here, it failed to go lower, tried to come back up, there weren't any buyers, and then when it broke back down right here, it just absolutely collapsed. Obviously this doesn't use any of our other very powerful tools such as the IntelliTrend and the FX Trend Intensity Pro, which add to your probability. Notice this down move here had more weakness than the up move had strength. It broke back underneath the previous day's low. And notice also the extreme IntelliTrend dark red bars. Extreme real-time weakness. Let's look at some other examples. The Australian dollar. Once it broke underneath yesterday's low, it then acted as resistance here, so you might have had a trade here, you had a trade here, came back up here. Again, notice the extreme weakness on the down moves, very little statistical strength in comparison on the way up. When it broke down here, you could have gone short. When it failed to go back above the previous day's low here and went red, you could have went short. This is a tremendous yet simple tool to help you find some very high probability trades. And they also, many days, act as major support resistance, and you can use them as profit targets. Let's look at this Australian yen yesterday. Came up to the previous day's high, acted as resistance, didn't have that much statistical strength at the time, and then when it broke out above there, the trend continued. And a lot of times when you have breakouts above or below the previous day's high or low, the market goes 10 or 15 pips above, then it will do what I call a retest, come down and see if it can get back inside the previous day's range. If so, it's a failed breakout. If this price level holds, then trends usually continue.